So now let's talk about premium really quickly and talk about cheap versus expensive on an annualized basis. So if you're buying options, you would like options to be cheap, and then if you're selling options, you want them to be expensive, at least on an annualized basis. The amount of premium adequate for the risk that you're undertaking needs to be in consideration. So basically, you got to decide that the amount of risk that I'm putting on for this trade, is it worth it? Is the payoff enough? Then also, you got to have your earnings consideration as well as what is the market volatility consideration that we went through earlier. Now, fundamental analysis is very, very important. So I like to look at things in a quick snapshot. I want to summarize sales. I want to summarize earnings. And I really want to look at the company guidance. So let's go ahead and look at our MAP scorecard one more time. So we've seen this before, but what I want you to look at is look at all of the positives. Across the board, a lot of positives, and that is going to influence my overall technical and fundamental score. So 73.5 for technicals and 75 for fundamentals is actually really high. So when we talk about that market snapshot on fundamentals, this is what I'm talking about right there. Sector analysis is very important. So again, stock sector performance considerations that you want to be thinking about are, is the stock a leader or a laggard within the sector? So if the stock's a leader, that means it's outperforming the sector in terms of its price performance. If it's a laggard, that means that the stock is underperforming the sector. So the question then, is the trend in your favor? So if the stock is in an uptrend and I'm putting on a bullish options trade, it probably makes a lot of sense. Vice versa, if you're looking to put a bearish options trade together, is the trend negative for the stock? So again, what's the price history and expectation for the company? Where has the stock been? Where do you think it's going to go? You want to think about that stuff whenever you're putting the options trade together. Also, is the stock trending or is it range bound? I'm thinking about different options trades for a trending stock than what one is if it's a range bound stock. And then also think about odds versus the expectation of price targets. Is the stock more likely to retrace where it's been, or is it more likely to keep finding new ground? Let's look at two charts to see the difference. This is a one-year chart of SolarEdge. This is actually a company that my research has been looking at over the past year. It's a very bullish trend, and we started getting indications of unusual institutional activity, bullish activity. Well, what is the trend here? Well, the trend here is that the stock is going higher. So if I'm going to put an options trade together, I'm more likely to bet on the stock going up than I am going down because it just hasn't been revisiting lower prices. It keeps going up. Now here is another stock that I know a lot about, and this is Skyworks. Look at the trend. It's kind of range bound, right? Every time we get around 115, the stock tends to come in. Every time we sit in the 90s area, the stock tends to pop. So I might be betting on a bullish move in the stock when it gets down to these 90 levels, and then a bearish bet if the stock gets up to right around $115.